Hey guys, it's a Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio. Of course, the metrics as well as the buying power and the individual holdings and how they're performing, as well as what price I would want to buy Berkshire Hathaway at. So jumping right in for today, we are up right around $300 for today. We're up $359, or about 0.7% for the past week. We're down $70 for the past month. Then we're up $630 for the 3-month mark, up 1.2%. Year to date, we're up $3,700, about 7.5% return. Then year to date, we're up $6,200 with a 13% return for the past year. And then all time, we are up $18,194.39, a 51.5% return all time. So guys, overall, you can tell in the short term, the market is an emotional roller coaster. Nobody knows what it's going to do in the short term. But in the long term, the stocks that I've picked have grown earnings. Therefore, the stocks in the portfolio have shown that as well. Of course, you're going to have major dips here in 2022. Well, first of all, in 2020, we had that huge COVID breakout, lost a lot of money there. Then, of course, in October of 2022, we got down to like 44,000. Then again, November, right around my birthday, we got down to about 44,000. So, you know, volatility is the name of the game, but if you can react the right way, and buy quality will pay you in the long term. Buying power is sitting at 91.29, sitting on near $100, and I'm going to let that sit, and I'm going to keep letting it compound until I find a deal that I'm really excited about. So jumping right in to the individual holdings, starting off with ticker symbol O, Realty Income, sitting at 53.17. We've got 170 shares, $9,000 of market value. Average cost is right around $65 per share. Around 17% of the portfolio is in Realty Income. Today we're up $17. Total, we're down a little over $2,000 with an 18% loss. So guys, this is a great reinvestment opportunity, a good cost down average option here for those dividends. So as of right now, I believe that is the best option that I have within the portfolio. Then we've got Coca-Cola sitting at $62.64, 15 shares of this Dividend King, around $940 of market value. Average cost is $60.54. 1.7% of the portfolio is in Coca-Cola. Today we're up 27 cents. Total, we're up $31 with a 3.5% return. A dividend on July 1st coming in of $7.28 for my 15 shares. So guys, as of right now, we are up a little bit, but not enough for me to say it's not in my buying range. I would want to keep it around $65 to $67 per share would be where I'd cut it off around $67. So I'd still buy it at these prices. So if it stays in this range, come next month, I might be adding to the Coca-Cola position. Then we've got Altria sitting at $44.84, 320 shares of this Dividend King. Market value is $14K. Average cost is around $47.30. 27% of the portfolio is in Altria. Today we're at $46. Total, we're only down $700. Guys, this has been down as much as, I think, $1,800. So a 5% loss on a company that's bringing in over $300 of passive income is not that big of a deal to me, and it is a great dividend reinvestment opportunity. But as of right now, I don't want to put the dividends back in simply because this company has become such a big position in the portfolio. So I would rather put that dividend and just let it sit in cash and put it towards something like Apple if it drops, or Visa. Then we've got Apple. Now, this has been riding high simply because Apple announced an AI option within the Apple ecosystem, and I think after a little while, that announcement will no longer be reflected in the stock price. It boomed up. I can show you guys. See, it's up $22 in the past week, so you can tell when they announced the AI offering. It's up 12%, $23 for the past month. So eventually, guys, I think that this will drop. But the thing that's driving me nuts is I only have one share. So, of course, the market value is going to reflect the price of the stock. but my average cost is $132, so I'm up nearly $100 per share on Apple. 0.4% of the portfolio is in Apple, guys. I want this to be the single biggest position, but I don't know if that's ever going to happen because it just doesn't drop. Today we're down $2.65. Total, we're up $81 with a 61% return. So, guys, Apple is flying high, which is fine. It's just I want it to be a big position, and I want to be able to reinvest dividends because that Altria dividend could purchase a full share of Apple, especially at my average cost. I could buy 2 shares every month Altria pays, but I don't want to bump up my average cost this much. So originally at $130, I could buy 2 shares of Apple with that Altria dividend every month. That was the plan because AbbVie was overpriced at the time. Well, now Apple is way above my average cost and above a price I'm willing to pay. So as of right now, I wouldn't be putting those Altria dividends toward Apple, but that's part of why I'm holding cash, because I know there will be a time in the future where Apple is going to be lower and I can allocate capital more effectively and get more for my money when it comes to Apple. So I don't want to buy it at these inflated prices, but I know that patience is the name of the game, and eventually there's going to be some bad news, like maybe the iPhone doesn't sell as well, or maybe a show flops on Apple TV, something like that, or something happens with the ecosystem. I think the biggest issue with Apple is actually regulatory issues. So I think maybe if they crack down on Apple's ecosystem or threaten to, that might be the event that causes the crater that I need to buy the stock again. Then we've got AbbVie, which is in the same position as Apple, sitting at $172. We have 95 shares, $16,000 of market value. My single biggest position within the portfolio, right around $95 per share is our average cost. 30% of the portfolio is in AbbVie. Today we're up $220. Total, we're up $7,200, nearly $7,300, with an 0.7% return here on AbbVie. And guys, this does pay me every single quarter around $150. So this is just like Apple, where I would love to buy more, but it's just so high at these prices that I don't want to reinvest and bump up my average cost that much. So the dividends from AbbVie are going to go towards either T. Rowe Price or Visa or Google if it's low enough. So I'm kind of stuck with this one too, simply because it's climbed so high. But I do love AbbVie, and I think the dividend will keep growing, and that cash flow will just keep buying me more T. Rowe Price or Google or Visa. Then we've got, of course, Visa stock, ticker symbol V, 273. We only got 1 share, so the market value is $273.62. Average cost is right around $270 per share. 0.5% of the portfolio is in Visa. Today we're up $2.45. Total, we're up $5 with a 2% return. Guys, this is still very much in my buying range. I would go up to around $277 to maybe $280 would be my cutoff price for Visa. So it is a investable option for me right now. So that Altria dividend could purchase a share of Visa, and I honestly would be happy about that, simply because I've been waiting to purchase more Visa. Then we've got Google at $176.60. We've got 3 shares, $259 worth of market value. Average cost is $165.60. Right around 1% of the portfolios in Google. Today we're down $6.54. Total, we're up $33 with a 6.5% return. So guys, this is also, it's a bit above my average cost, but I think Alphabet or Google is still a great buy. One of the things that I will say that I was super proud about is these shares were purchased with dividends. So this was dividend reinvestment. I didn't have to add any new cash, and that's really the beauty behind dividend growth investing, is you don't always have to allocate new capital. I didn't have to work hours at my job in order to buy these shares. Altria paid for them, or AbbVie paid for them. So that takes a lot of weight and stress out of the investment equation when you have a machine constantly working for you and you don't have to worry as much about putting new capital in. Then, of course, guys, to close out the portfolio, we got T. Rowe Price at $117.57. We have 100 shares, $11,000 worth of market value. Average cost is right around $110 per share. 22% of the portfolio is in T. Rowe Price. Love that even number. Today we're up $50. Total we're up $780 with a 7% return and a dividend coming in on June 27th of $124. So guys, this is one of those that I think could double. If you look at the 5-year chart before all of, like right after the COVID pandemic, it shot up and then it dropped again. Interest rates changed. A lot of people pulled out of money market funds or ETFs, private investors like T. Rowe Price, simply because the 5-year treasury bumped up to 5%. So a lot of ETFs like SPY or STHD, STHD is a little bit higher yielding, but some of those lower yielding ETFs got a lot of money taken out. A lot of investors fled out of them simply because the yield was not matching the 5-year treasury. If you can get a guaranteed 5% yield, why would you invest with T. Rowe Price if their fund's only paying you 2% a year? So, I mean, there was a lot of individual stocks that saw that. I did see Pepsi CEO talk about how, they were like a 3.5% yield, which they think that, of course, over the long term, they're going to return more than 5%. So, but he did talk about how, when yields go up, stock prices usually fall because people rush out. They leave en masse because they can get a higher yield with the treasury risk-free. There's no risk on a treasury bond. You're locked in at 5%. With individual companies, there's always risk. So it's kind of logical overall for the market to decline because people can get a matching or better rate of return with more mental safety, with a lot less stress on your mind when it comes to investing. So I think T. Rowe Price, just like Realty Income with rates changing, I think a lot of people flooded out, and eventually I think when rates change, T. Rowe Price will continue to be profitable while we wait, but I'm also getting a growing dividend, and they are phenomenal at asset allocation. So I think this could be one of those that, even though in the short term, I know the overall return, the total return has been up and down. Like I've been down like $400, and now I'm up $700. So there's some volatility, but I think if I analyze the stock correctly and I hold it for the long term, I think I could pretty much double my money if I'm patient with T. Rowe Price. And then of course, guys, we have Berkshire B. Ticker symbol BRK.B, sitting at 407. So guys, I honestly, I've been talking about just purchasing a share of this when the dividends come in for Altria, simply because I can always cost down average. So same thing, it can go both ways. So for Apple, stock shot up, right? So I don't want to buy anymore because my average cost is so low considering how much the stock has gone up since I bought it last year. The same thing could happen for Berkshire. That's the good and bad thing about, individual stock investing, is that, you never know when the stock's going to go up. You don't know what's going to go down. You just, act on reactions, essentially. So even if the stock goes up, I'm just happy to own a share of Berkshire. I want exposure to that Geico float, to that Gen Re float, to that Westco float. I'm very comfortable owning Berkshire Hathaway for the long term. So even if I have to buy it at a little bit of an inflated price, like even like $420 or $445 or something like that, even $450, I'm okay with paying up for a plethora of good businesses. And I think overall, even if I pay a little too much, the return might not be great, but I can always cost down average. So with that being said, guys, I want to say thank you so much for watching. Remember to hit the subscribe button on my YouTube channel, That Dividend Guy. Make sure you guys leave a comment. I was gone for a month and I got a lot of good feedback on that first video. So it feels good to be back, and I'm excited to give you guys more content. So with that all being said, thank you so much for watching, guys, and I'll see you tomorrow with another Robinhood portfolio update. Take care.